based on the fact of the fundamentals that we're running in the United States. Let me take a pause here for a minute. Okay, coming back here, what I want to point out to you is that interest rates are moving sharply on their own. And I want to take a look at the yield curve. Basically, you're looking at the 2-year bond up 597 up to 225. We've seen a tremendous sharp move to the upside on interest rates, basically by themselves commanding a higher rate based on the current fundamentals that we are running in the U.S., particularly now, even as a consequence of this war affecting the whole economic, you might say, the whole economic system globally. And what we're running here is a level of inflation that exceeds 8%, while the 10-year bond is paying about 2.46%, and we're running a huge negative gap. And according to some of the data and sources that we use in terms of inflation, inflation is running more like 15% using the 1980s model. And so even using the current model, inflation running at about 8%, that is a huge gap. That is a huge gap. And we're running negative interest rates. If you look at the 15% level, inflation is just unbelievably higher than the 1970s. We have a gap of easily about 10% negative yield on the US dollar. And this is the reason why we're beginning to see bond vigilantes forcing the market itself, demanding higher interest rates, and inverting basically the yield curve. Now, just based upon past research and actually looking at the conclusions that every time there is an inversion in the yield curve between the 2 and the 10-year, or the 10-year and the 30-year note, there is a recession imminent around the corner. So this is what the bond markets are saying. And this is one factor that has to be watched very carefully. The other basically is that food and energy prices are going skyrocket. We're looking at the price of wheat made a recent high of $13.63 a bushel. You're looking at corn at $7.50 a bushel, and I'm showing you basically the futures markets in grains, and you can see the high in corn was $7.8275, and it doesn't appear that grain prices are coming down anytime soon. So this whole situation of the Ukraine is causing a massive supply strain in commodities, energies. Russia is demanding now payments basically of energy prices in gold. Initially in rubles. So gold is becoming part of the discussion. And I believe wholeheartedly that as we begin to see a lot of these black swans unfold in the currency markets, which is really what this whole war is about. It's about crude oil and it's about the economics. It's an economic war that we're having. And so we're putting on sanctions, and Russia, the second largest oil producer, natural gas, Ukraine has the second largest natural gas deposits in the world. And this can potentially make Russia the largest producer in the world if they are able to invade Ukraine successfully. So this is about oil. This is about natural gas. This is about controlling the Western, the European, the Eurozone, controlling their demand for gas, as the Eurozone and Germany is highly, highly reliant on Russian natural gas and oil. And yet the U.S. is trying to kiss Saudi Arabia's ear to get oil from them, while they're blocking production in the United States, which has one of the richest oil deposits. There's something wrong with this picture, in my opinion. So, since I'm not a politician, since I'm not an economist, what I'm trying to do is monetize out of this situation as a trader and take advantages of the anomalies that we see. And so what I focus on primarily, obviously, is the most volatile markets. And we're looking at, in this case, obviously, gold, silver, Bitcoin, giving us the opportunity to do that. As you can see here, the market reverted right back up again. We already made our money for the day, basically, as a day trader. And we are holding, long-term, long positions. Our core position in precious metals is on the long side. I'm recommending all my traders in Discord to basically follow and build a foundation here, a long-term foundation in precious metals, from the physical aspect of the market to the futures aspect of the market, to stocks, ETFs. The metals markets, and in particular the silver mining shares, are one of the most undervalued precious metals on the board. And this situation here with Russia and Ukraine is completely putting a hold on the supply available in those commodities, in those products. So I don't see any resolution short term, and it feels like this is going to continue to put in more pressure on the inflation factor. And so coming back here, as far as the markets are concerned, in terms of how do we trade this information, what we want to do is buy any deep corrections that we see in precious metals. I don't want to go short here because unless it's a quick trade for day trading, and that is counter trending. Obviously, my underlying long position, but that is the risk. If you want to take the risk in day trading, day trade the market and take advantage of that liquidity and continue to add that to your long-term position. Any profits that you make, just add to your long-term position. Because the foundation that we're building here is explosive for precious metals, particularly for the silver market. And any sharp corrections that you see here are going to be bought. There's no doubt in my mind that this asset in particular is completely undervalued, particularly if you factor in the inflation rate that we're running. So the question is basically, when is the market going to go? Everybody out there, all the silver gurus here, have been calling for silver to explode ever since I can remember. And although when silver goes, if you're not in it, you're going to miss one of the fastest, most volatile instruments. But it's a great tradable instrument, as well as being able to buy and hold, especially now as we continue to see the US dollar imploding. We are in a currency war, and obviously the US dollar happens to be the best currency regardless of any other weaknesses that we have in other currencies. The question is, how is the US dollar purchasing power holding as the petrodollar, as the US world's reserve, as the world's reserve currency? There is talk about China and Russia negotiating payments on energy prices in yuan. There's negotiations with the Saudis about possibly shifting or using the yuan as the petro currency. That would be a significant shift in the policies for the US dollar as the reserve currency. I think we're entering the level of acceleration of the US dollar that has been long waited for, and I think the pandemic in 2020 was simply the trigger point that accelerated this last, you might say, collapse of the US market, of the US dollar. Because when you really think about, since 1971, when Nixon lifted the gold standard, the dollar is down about 98% or more against gold. So that's a, tremendous shift in this asset as a currency, as a world's reserve currency. And unfortunately, we have these forces now which are stirring the pot, so to speak, which are China and Russia, affecting the whole economic system. It's not just the geopolitical rhetoric that's going on, but how is that affecting the whole economic system? And as we see, we're finding ourselves that we've been highly reliable on Russia for energy, natural gas, on China for low cost manufacturing. Everything in the US at some point, when you read the label, said made in China. No matter how expensive it was. And I think that's about to shift. Bitcoin is trading at 45,180. Bitcoin is one of the beneficiaries that essentially has established a decentralized system in order to protect your assets. And I think Bitcoin finally has matured into a solid asset that you can invest, you can park your money, and continue to maintain its integrity and its purchasing power. So, coming back here in terms of what I am recommending here, or what I'm suggesting, what I'm doing here, I am buying physical silver every chance I get and taking delivery. And at the same time, I am holding positions in silver mining companies that I believe are tremendously undervalued. And one of them that we have recommended is HECLA. HECLA Mining is the largest silver producer in the United States. And if we're going to see a shortage in silver, which I believe is imminent, then this is a stock that you want to buy and hold. And we recommended this stock back when the price was at about 508, around the 15th of January. And we have seen, obviously, a high so far of 766. We've rebated back down a little bit here. We reverted back down a little bit here and rejected some of these high prices for the time being, as was anticipated. When it's in red, it's basically the algorithm telling us to expect some kind of supply. So the market is coming back down here, testing the standard deviation below the market and the pretty much levels of accumulation recommended here that start in the blue levels, or I would say the by one weekly level of 645 is given us about a 90% probability that potentially a reversion could unfold from these levels if activated. As you can see here, we're beginning to see the market beginning to form and consolidate around these prices. So from a long-term point of view, in terms of building an asset in this market, we're recommending HECLA aggressively, and we're trading gold, silver, and Bitcoin on the futures markets, and we're also trading it long-term. The gold market came back down after the high that we saw of 2078, and on March 16th made a low of 1895 in a short period of time. So the volatility is increasing, and it's great. It's a trader's dream come true, as long as you are on the right side of the market, obviously. And so in terms of gold, silver, and Bitcoin, you want to buy corrections into the levels of support that you see being identified here by the variable change in price momentum indicator. We made our money for day trading today in gold so far, and what I'm going to do here, just allow for the market to trade into the supply zone and see the strength of any buyers that come in here, if they are strong enough to take out all of the supply that seems to be coming into the market at these levels. We're going to continue to keep the Discord trading room open for the remainder of the day. And if you would like to come in as a guest, just subscribe and like, and or click on the link, and we'll be more than glad to allow you to see what we do live in our Discord private trading room. When the market breaks resistance, as you can see here, of 25.51, came down, tested it, didn't close below, and now it's trading above it, it's actually acting as support for the next fractal in price. And it looks like the market has a bullish momentum. But we made our money for the day here, and I don't want to buy into this area as much as looking to sell into it, because the buying from here is only about a 10% probability. Although it can go up, you're only looking at about a 10% probability. And as a trader, I want to make the highest probability trades. And that is essentially whether the market is going to go up and test that 24.74 and fail, coming down below, or close below 25.31. But in the meantime, we already have made our money for the day. So let's continue to watch the market and see what happens here and what transpires throughout the day. In the meantime, my friends, we'll talk to you later. Have a great trading day. We'll talk to you soon.